This podcast contains general information only and doesn't take into account your personal financial situation or goals. Welcome to Fit for Business with Sonja Pfitz. Episode 4, Keeping Your House in Order to Thrive. Thanks for joining us. In the coming episodes, we'll take a deeper dive into the financial reporting that you'll need to have ready when applying for a loan or restructuring your existing financial arrangements. Plus, we'll be discussing strategies on how to mitigate your cash flow problems with specific, easy-to-follow strategies and financial products that can support your business.
Welcome back, everyone, to episode 4, Keeping Your House in Order to Thrive. Operating a business takes courage, vision, and optimism. However, too often I see great businesses get into trouble by not having enough time to assess in detail how the business is trading or plan for the future operations of the business. Even startup businesses can fail in these areas. As business owners, we have a vision, a dream, which we bring to life. But as we are consumed by the day-to-day operation of the business, dealing with customer orders, suppliers, staff, we can miss vital areas which can quickly unravel our dream and potentially cost us our company, our livelihood, and in extreme cases, our home. I want to support business owners to avoid financial mistakes that could harm their business, so we'll be briefly discussing a few key areas business owners should consider. In later episodes, we'll go through these in a lot more detail. But number 1, create and maintain a detailed budget. Track your income and expenses regularly to understand where your money is going. This will help you to make better financial decisions and spot potential issues before they become major problems. 2, monitor your cash flow. Keep a close eye on your cash flow to ensure you have enough money to cover your expenses. Now, this may alter month to month and you may have unexpected things come up, but cash flow is the lifeblood of a business. Delayed payments or unexpected expenses can disrupt your cash flow, so it's important to manage it effectively. Thirdly, be cautious with debt. We've talked in previous episodes about the lending process and taking on new debt or restructuring our debt. But before taking on debt, be careful to evaluate whether it's necessary and whether it's the right time to actually take on this new debt, whether a restructure of your existing financial arrangements is actually more prudent than taking on new debt. Is there a better way to restructure what you have to still achieve your objectives and requirements with the help of a qualified commercial broker to assess if you can comfortably repay it and what financial products are the right ones for you and your business and your situation. Regular reviews of your financials. We've talked again about this in previous episodes. Analyzing your financial statements. That means your balance sheet, your profit and loss, your cash flow statements to assess your business's performance. And if it hasn't been trading really well, why is that the case? These reports help you to identify areas for improvement and make informed decisions. So in assessing these reports, it may not be the right time to embark on taking on new debt, but it might be a great opportunity for you to look at how to restructure elements in your business to make it more robust and healthy.
Did you know many businesses fail due to inadequate funding, poor credit controls, or inexperience? That's why you need this podcast, Fit for Business with Sonja Pfitz.
Regular reviews of your customer and supplier ledgers. Again, we talked about this in a previous episode. Analysing your receivable ledger to see which customers are paying on time and those that are not. This is an area that is very important in the businesses and sometimes is overlooked. By implementing regular collection activities is prudent to your business's operation, along with credit limits and unfortunately having to make the hard decision about putting some of your customers on stop supply if they are not paying their bills. You need to introduce fairly strict rigors in your business around credit limits that you should apply to your customers. How much are you prepared to allow them in terms of supply? Checking on your customers before embarking on a relationship with them. Have a look at them. And that may mean doing a credit report on their business to see how they've been trading. If you're not getting paid from your customers on time, you're going to struggle to pay your suppliers on time. And we want to avoid that situation where it could flow on to having nasty effects such as court actions or defaults against your business. Lastly, planning for emergencies. Now, this is an area that is very difficult for a lot of businesses. Building an emergency fund to cover unexpected costs or periods of low revenue, for example, January and February. Straight off the back of Christmas time, a lot of your customers are going to be a lot slower in paying their outstanding invoices. So you need to be able to accommodate that, and that may mean having an emergency fund if possible. Certainly by having this financial cushion can help you navigate challenging times without impacting your business's long-term sustainability. As I said, that is not always possible, but is something worth considering and looking at in your business to adopt. And one of the final takeaways that I will say to you is please do not use your business's bank account to pay your personal expenses. Separate your business and personal finances. Don't intermingle them together. There are some lenders who provide low doc facilities where they are really focused in on your bank statements for your business, and they will assess those in quite a lot of detail. So if you have your personal expenses intermingled with your business expenses, it's going to make it very difficult for the lenders to pull those apart and really see how the business's cash inflows and outflows are happening within the bank account. So keep them very separate from one another. And like always, seek professional advice. Consider consulting with a qualified commercial finance broker. They can provide you with valuable insights and flag potential issues and help you make strategic financial decisions with you and your accountant. So remember, each business is unique. It is important to adapt these tips to your specific circumstances and situations. In upcoming episodes, we're going to take a much deeper dive into these topics with a qualified accountant and real-life examples with other business owners.
Sonja Pfitz has been a commercial finance strategist for SMEs, working in the finance industry for over 27 years. This podcast series is designed to inform you about the lending landscape for your business and to help you implement the right financial solutions to achieve your strategic objectives. Thanks for listening and look forward to having you join us in the next episode of Fit for Business with Sonja Pfitz.